We've got some hot self-managed super fund tips and tricks this morning to supercharge your wealth. If you haven't looked into this, stay tuned. We're going to give you some really good insight. Good morning.
G'day, mate. How are you?
Really good, you?
Good. Good. Thanks for having me again.
Pleasure. This is a good segment this morning. Rare we get on a broker of this caliber writing hundreds of millions of dollars worth of loans each year. But self-managed super funds, I guess, is another part to a client's wealth sort of strategy, and we're going to talk about that this morning.
Yeah, look, we get a lot of self-managed super fund setups that then want to leverage or use the power of leverage in that self-managed super fund to buy property and continue their strategy.
Yeah,
it's quite a unique way to add to your wealth and add to your portfolio. And there's a few things that come down the track, like when you reach retirement.
Yeah, and can we just talk through those multipliers? So when you're borrowing in your personal name versus your SMSF, what that sort of looks like and how it actually protects the borrowing capacity for the individual.
Yeah, great question. So what happens in your self-managed super fund? It's a separate entity entirely. So therefore, it takes into consideration what contributions you're making to your super fund. Obviously, you then change it into a self-managed super fund, but those contributions are redirected into the separate entity. So being a separate entity and using, say, the 12% on top of what your employer pays you as a salary, that's a separate metric that is then used for the income servicing. So in your personal name, you have a wage, a salary, and then on top of that, you have your super component. So there's two different income categories there that, one's used in your personal name, being your wage, and the other being the 12% contribution is used in your self-managed super fund. So in terms of the multiplier and how the servicing loosely works is in your personal name, you've got about a 5.5 times multiplier on your taxable income figure.
Yep.
And then with your self-managed super fund, the contributions are obviously a lot less, but being a commercial loan, it then opens itself up to a whole different range of lending criteria, one of them being a higher multiplier on the income.
Yep.
It's around 8.5 to 9 times what the contributions are. And on top of that, we use the proposed rental income because you can purchase investment properties only for the residential side of self-managed super fund.
Yeah, right. The genius, I guess, part of all of this for a buyer that we interact with from this, buying and selling side is that they're able to get into their next property that little bit quicker if they've got some kind of liquidity there, some serviceability. They can actually go out and buy. Whereas in their personal name, they may choose to not do that because of business reasons or something else in the background, or they've just, don't have the capacity to borrow anymore.
Yeah, exactly right. Look, if your strategy is property, and we see it time and time again with people and their super balances being at around $120,000, $150,000 in total. So combined, there can be up to 6 members in a self-managed super fund.
Yeah, well,
and they don't have to be your family. They can be friends. They don't have to be relatives. They can really be anyone that you trust, and that's dictated by what you're trying to do. But the balance would be used as the deposit or thereabouts, and there are products within the SMSF lending market that even have an offset account. So you can use that like your typical home loan, where any surplus funds or contributions that you don't want to put into the property, which, by the way, once you do put into the property, you can't take it out once it's in there unless it's sold. It doesn't become cash again. So you can't do any redraws or refinances and equity releases like that as you would do in a personal name mortgage.
Yeah.
But you can get an offset account, and I guess where I was going with that, in terms of what you come to the table with as your deposit, would be from your balance of your super funds. So whether it's husband and wife, or brother and sister, or mum and mum and another family member, that would form your deposit. Typically, we see it working, anywhere upwards of $120,000. You can borrow up to 90% as well. There
Right.
are obviously higher rates and risk fees associated, but yeah, it is a great opportunity for people to continue their strategy towards accumulating property wealth.
Super popular amongst self-employed business owners as well, and then at an arm's length, being able to rent that space back from themselves, or somewhat utilize it in a different entity.
That's almost the perfect strategy that we see. Say tradesmen, builders, business owners. We've got legal firms and stuff like that, or accounting practices that might purchase their office space in their self-managed super fund.
Yeah.
And then they really control, the expense to their business in the rent that they have to pay their landlord, which is their self-managed super fund. And they control topping up their super, which is coming from the business expense being the rent. So it's really quite ingenious to, close that circle on, really operating your business efficiently, and also, optimizing your superannuation.
Yeah, and I think the reason like more people are not doing this is because they maybe have a misconception that it's expensive. Buying a property is expensive, or setting up the self-managed super fund is only for really high net worth individuals. You can get a commercial property like storage unit if you're a tradesperson, and you maybe have a 50,000, 100,000 sitting in super. You can buy something like a small industrial storage sort of vault, or a warehouse between $200,000 and $1 million, and take control of that. Perfect for a tradesperson.
Yeah, it's really open to residential and commercial properties. So within our lenders panel, we've got about 9 self-managed super fund lenders that do residential and commercial properties, and ranging from retail, offices, warehouses, industrial storage, and all sorts of residential properties, whether it's in a metro region or a regional centre. There's really limitless options in terms of what you can do. It's just about running the numbers and understanding what that person's goals are.
Yeah.
For that next property purchase.
Yeah. Well, probably the one downfall I see from a buying perspective is people get the entity name not wrong, but they just miss a crucial step in the in establishing the entity. So we're just going to show you quickly now what I guess the process looks like. You would deal a lot with accountants and helping people set that up with forming a part of their team. Where's the best place to sort of start?
Yeah, exactly. So the best place to start is obviously, where are the members at, and then have they set up their self-managed super fund, because that's the entity that's going to be on the loan agreement, and it's also got a corporate entity within that as the trustee.
Yeah.
And look, not to go into too much of a technical standpoint, but there is this step that happens prior to purchasing a property. So the SMSF is set up, and then there's a separate property holdings entity. So it's called a limited recourse borrowing agreement for the purpose of asset protection, and because it's a commercial loan. So whilst the SMSF is holding the loan and is on the loan agreement, you've got the property that is held by a separate, what's known as a bear trust. So it's a separate trust with a separate corporate entity, where the members are the beneficiaries and the directors of those corporate entities. So SMSF set up first. Once you're ready to purchase a property, you set up your bear trust, and that entity on the bear trust is what holds the property. So there's a couple of different steps to it. A lot of accountants can help with this, and look, we do the lending side of things all the time, and also have specific people in our network that can, be specific, be cost effective in setting up the SMSF, and really help the process move along as it needs to.
Yeah, I like what you said off air as a bit of a saving trick here. A standard accountant was sort of 3 times the amount as
Yeah, look, I think traditionally speaking, there's maybe like a 5 or 6 grand fee associated with setting up a self-managed super fund. SMSF partners, they have digitized the process and they completely manage an SMSF, and they can set everything up for under $3,000, which
Okay.
it can happen in 48 hours. Some key things to look out for: if you have current outstanding tax debts, the ATO won't approve the setup, so you need to clear your existing ATO debts. And also they look for flags of maybe things that might suggest that somebody's not ready for it, or being told to do something that they might not have the education about. So there's definitely some research for people to do. That's why there's great resourceful pages on Shore Financial's website as well, which we can share the link to. But probably the biggest opportunity in self-managed super funds and super in general is that the 12% that your employer contributes, or what you can contribute up to the threshold at $30,000 per annum, is that it's at a concessional tax rate. So the income that you get taxed on getting paid $100,000 is much higher than the concessional tax rate of the income going into your self-managed super fund or your super fund, which is 15%. So the tax rate is much more forgiving. And if you've got things in your super, and once you reach retirement age, the opportunity at retirement is that there's no tax around what income that's being generated, and there's no capital gains tax on what you sell. So if you purchase a property in your self-managed super fund, take the loan throughout the period and pay it off in 15 years or something like that, and then you retire, well, you've then got you've used the power of leverage to gain the exposure to an asset of $1 million with your $150,000, $250,000 in super fund, and then whatever that's accumulated by, the capital growth is then a tax-free capital gain on exit.
Well, there you go. I think everyone needs to have a quick look at their balance this morning and work out if what's being done with it, and if not a lot is the answer, or it's just been sitting in a fairly standard account where management fees come out almost blindly, then maybe put a strategy in place, and you'll be surprised how much you can do with it.
A lot of people are taking control.
There you go. Bring back the power. Thanks, Zach.
Thanks, mate.
Have a good day.